Welcome. This is Don Atanasio, Director of the Energy Law Program at GW Law. It's my pleasure to introduce our last panel of this conference. And just to give you a preview, we will have closing remarks by former Chairman Stephen Burns after the end of this on a separate link. But this is our very last panel, and wrapping up this conference back to the point where we began, where we start off talking about nuclear as an investable asset with a focus on the ESG framework, environmental justice, the impact of new technologies, the geopolitical issues, and the very many other impacts that one has to deal with when thinking about nuclear and its future. So to lead today's panel, we have with us Adam Rodman. Adam is the founder of Segra Capital Management, which he founded in 2013. Segra Capital focuses on global capital investment opportunities that are unconstrained by the types of common parameters that many investment funds use when advising on investments. And so therefore, they're able to take a long view and look at some of the technologies that have great promise for the future. So with that, Adam, I turn this over to you.
Great. Well, thank you so much. And I guess I was in a workshop yesterday, but this is the first panel, so I really appreciate you inviting me to be along here. I think for probably hopefully the benefit of the audience, an open forum maybe is the ideal route to go here to get the best out of this fantastic group that we've assembled. And speaking of which, we have Paul Murphy, who I know very well over many years. If you are anywhere touching the nuclear industry broadly, you know Paul, but he's the founder, managing partner of Murphy Energy and Infrastructure Consulting LLC. That's his day job, but I would say his Batman night job as well is pretty much eating, breathing, and doing all things for our domestic nuclear industry. In addition to being an expert, on nuclear development and financing, not only domestically but abroad. So if we're talking about the investor and the C-suite, couldn't imagine a better person to have on the panel than Paul. So thank you for that. And then Mehul Shah is also joining us. CEO, excuse me, of Clean Core Thorium Energy. I also have the pleasure of knowing Mehul quite well and what he is developing as CEO of this very promising company that, as part of a thread, which I believe has been in many talks on this, over this investment conference the last several days, is how we continue to innovate for an industry that has been somewhat swept aside over the last several decades. And I think Mehul is definitely at the top of the list of people with cleaner, safer, and more reliable fuels that is helping us achieve that goal. So with that said, maybe we'll kind of dig in at the high level. Paul, if you don't mind sharing with us what got you interested in nuclear broadly? And then specifically, how do you see the industry today, maybe dominated mostly by the idea of advanced nuclear and SMRs, but how do you see today's industry as being different from when you joined? And then Mehul, I'll give you a question I'm going to ask you as well, just so you can prep while Paul is talking. But maybe talk to us a little bit about why you think your fuel technology is actually is something needed for the current market.
Absolutely.
Thanks, Adam, and thank you to everyone at GW for putting this event together. My background is as a project finance lawyer. Before I started my own company in consulting, I was, a project finance lawyer in energy infrastructure for a lot of years, and probably about 8 years into my career, I transitioned to Bechtel Power Corporation. At the time, Bechtel was organized by business lines, and the power business line had fossil and nuclear, and you just supported both, and I got interested. And I think what really got me excited about nuclear at the time was, I was a international policy major in college. So there's a policy element to it. I had served on active duty. So there was sort of a geopolitical side and government side to everything. There was sort of a legal component. There was an economics and finance component. And I think I was always fascinated by how it came together and the challenges associated with it. And my interest just grew over time in a lot of things that I've had the opportunity to do. In terms of, I think your larger question of what's changed, if you look at the early 2000s when there was a hoped for nuclear renaissance, we were just really seeing renewables come into the fore. We were seeing electricity markets deregulated. And at the time, people would say, nuclear power plants just printed money once they were in operation. Hard to build, but once they were in operation, they printed money. And over time, I think, at least in the United States, we saw a different dynamic taking hold where with deregulated markets, you are now competing with very cheap natural gas. And everybody assumed that would happen forever. And now you look at where gas prices are because of world events. And we know that energy diversity actually still means something. And I think, with renewables and subsidies for renewables and dispatch preferences, you saw that large nuclear reactors, which needed to run at base load, needed to run all the time, were starting to not become good investments in deregulated markets. And so what we've seen is a recognition, I think, of, at first there was, well, what's going on? Why can't we build these anymore? And the answer is fairly obvious, but then it's okay, well, what do we do about it? And I think we've seen sort of tools being put in place to sort of solve what the market has not, and this assumption that the market could solve all things was started to get challenged. And I think what became the sort of transitional moment, in my view, is just the prominence of climate change. And I think that when you look at what the biggest driver for nuclear now is that it needs to be a part of, not the only solution to, but a key part of meeting our net zero and decarbonization, or whatever label you want to put on it, has to be there. It's a simple math problem. You cannot solve it. If you have doubts, study what's happened in Germany. That should answer all questions. But what's really interesting over the last 6 months or so is we used to sort of talk about the intangibles of nuclear, like energy security, energy diversity, climate change, and say, you know what, our financial models fail us because there's no number you put into a financial model for energy security or energy diversity. But and so you would say that in a presentation, people would think you sounded pretty intelligent, but then you'd move on. And I think the difference now is we've seen the energy diversity point, the energy security point coming on top of the climate change point that had just sort of moved to the fore in the last few years. And I think we see that the world has changed. The geopolitics now dictate that we have to think differently about how we source our energy and the materials to produce that energy. And so that energy diversity thing becomes, so it comes back to, I think, the rise of policy again, in terms of making decisions that we just have to do this for, we had COP26, lots of enthusiasm last fall, global energy crisis, war in Ukraine, and everybody says, well, yeah, that's important, but we got to keep the lights on. And if I don't keep the lights on, that's a bigger problem. And so we just see the interplay of all these issues, which got me interested in the sector to begin with. But I think, we have more time to talk about the transition from large reactors to small and advanced reactors, but maybe I'll stop there to just turn the floor back to you.
Well, I'm going to ask you a quick follow-up that one ties in what I think are some of the questions that are coming in that I can see, and two segues nicely from Mehul to jump in. But if I were to put you on the spot, I completely agree with everything that you're saying in terms of a host of both climate and energy security events conspiring together to bring long ignored nuclear to a piece of the equation. But what most would say is that it's too difficult to do. Investors have been shunned away from the sector for too long. The post-Fukushima large-scale project albatross hangs heavy around our neck. How optimistic are you today that that's shifting, both because of the stick being carbon and energy security, but also the carrot, return for investors? And then I'll use your answer to pivot over to Mehul to talk about how maybe your enterprise is seeking to help with just this question.
I mean, I think what we're seeing now, especially when you look at SMRs and advanced reactors, we're still caught in a bit of a technology development phase, and we need to immediately transition to project delivery. And I think that you see some of the SMR vendors saying, well, I'm a vendor. And you say, well, that's great. Where's the rest of the project? And that's always where my bias comes in, because if you don't have all the elements of a project, there is no project. So what are we talking about? And so I think where the rubber hits the road is in two areas. Can you deliver a project, and can you finance it? And they sort of then run together, because if you can have the best technology in the world, but if you can't deliver it on time and on budget, or at least for the new technologies close to on time and on budget, the money isn't going to flow. And I think we can solve some of the market uncertainty. And so my optimism is really on the fact that there is a recognition that, maybe the market left alone isn't going to be able to do this, at least in the first instance. And we need government support in a number of ways, and hopefully to focus that support, not to let it be just a blank check. So that's where I have the optimism. But I think the burden on industry is you got to deliver. It's great to talk about how cool your reactor is, and it can also make toast and butter it, but all that matters is, does it work? And when can I have it, and how long is it going to run for? Because that's going to drive investors in the project. In the technology, you may take a different view with a longer term view, but once you transition a project, it's all about delivery. And that's, I think, the biggest challenge right now.
And Mehul, sorry, you haven't gotten to engage here, but it's probably the perfect time to bring you into this, because to the question about timelines and economics, waste, non-proliferation, some of the things that maybe the audience would immediately go to in terms of hurdles to investing in nuclear. I think you're looking to address a lot of that. So I'll give you the floor to talk about how great Clean Core is, and what you're doing to service those exact questions.
No, thank you so much, Adam. And most importantly, I appreciate the time that is given to me to be in front of a group of students, professionals coming together to push the progress of nuclear. And, to the point of Paul, what he mentioned, the renaissance of nuclear at the turn of the century. And I've seen over the last 30 years in my businesses in emerging countries, how difficult the climate issues has been and the electricity needs have been. That drove me to following the energy business, so to say. Well, I learned very quickly that renewable is intermittent, and what we need is a baseload clean energy answer. I spent almost 8 years designing a breeder reactor using thorium, but quickly again realizing that what's important is coming up with a fuel that runs existing reactors. And today, Clean Core is an advanced nuclear fuel company in process of qualifying, licensing, and commercializing its fuel technology by end of 24, which is proliferation resistant. And interesting thing is we provide a radical new approach to becoming a center of nuclear by aligning ourselves immediately and creating a cash flow from within. In our view, possibly the cheapest and the most credible nuclear technology by working with reactors that already exist and they are already operating and profitable. And we make them even more profitable. Our fuel creates, on top of it, early demand signal for HALEU and be part of US drive to be the world leader. So I believe that the same thing, at the same time, it can bring power back in the hand of the US, literally and figuratively, with the HALEU leadership in the world against Russia and China. That's what we are here for. And as a CEO, my focus is to positioning my business and product within the landscape of whoever I'm speaking with, whether it's the investors, customers, or partners. But what's important is we all need to come together to bring this on the mainstream. Like Paul said, that future advanced reactor programs will come in time. But answer needs to be now, and in light of the urgency of crisis that we are facing with climate. That's my thoughts.
That's very interesting, Mehul, and I'm gonna put you on the spot as well here. So a lot of questions coming in, and no surprise is this idea or this question really, whether or not nuclear will be quote unquote ESG. Now you're going to hear probably like a diatribe from me a little bit later in this if we have time about what ESG really means or doesn't mean. My firm has spent a lot of time trying to dig into it, but nonetheless, you know, if you're asking me, and the questions are coming in our chat, what over time does ESG try and do? And really, it's trying to elevate standards across different verticals. Not to go through the E, the S, and the G, but those are the top line, as a top line acronym with a whole lot of things under it. But I think we can all agree that broadly, it's a set of standards that's meant to elevate quality of businesses, or at least to have investors accelerate the development of quality businesses. So Mehul, if I was going to put that to you, if we want to say ESG, both in nuclear, but both in terms of what innovation, not only in reactor designs, but in all of the either supply chain or services or fuels that service nuclear, right? This is kind of a long forgotten industry. Most people think we've got reactors and that's it, but it's much more complicated than that. Your company is actually serving to address it. And so if we tie that back to ESG and maybe specifically what Clean Core is doing, but also what you think the industry can do better to really highlight what I believe are extremely strong ESG characteristics for an industry that isn't normally thought about, at least top of mind, as being an ESG leader.
See, in my view, the environmental social governance is all tied together. Today, there are 123 countries that needs clean baseload power. How are you going to address these issues in light of this climate crisis? And it can only come from established countries like United States, who can truly bring this on the forefront to deploy such technologies like our fuel delivers, where the spent fuel that comes out of the smaller reactor drops by 90%, and you cannot make a weapon out of the spent fuel that comes out. It's proliferation resistant. So it's a game changer. It turns the industry upside down right in the face of it. So I feel that our fuel really answers all the questions. What's missing right now is the communication between the industry stakeholders, who needs to come at par on a transparent way of who is closest to the finish line, who can deliver and build a bridge for the future technologies that's to follow.
You know, that's a really interesting point, Mehul, and I saw that Paul wanted to jump in, but I did want to highlight to the broader audience here, who may or may not be aware that if we're talking about the European taxonomy, which obviously in many ways influences how we think about ESG and other environmental standards, it was really a waste issue that often was the sticking point to the do no harm principle. So if you're creating fuels with 90% less waste footprint, to the questions in the Q&A standpoint, right there, you have a revolutionary improvement in the way that markets broadly might look at, frankly, nuclear broadly as ESG. Again, because waste footprint has been a sticking point, at least for Europe, and that does bleed into the way that we think about it here in the US. And I'm sorry, Paul, I think you were going to comment as well.
I guess, you know, part of it is, you know, you look at what happened in Europe in the debate, and that's you know, a set of countries deciding something. But, you know, whether or not nuclear is ESG worthy can be done at different levels. And we see that things are all over the place. You have Bruce Power that did their green bond that was oversubscribed, and that was very successful, rated by independent agencies for its ESG status, and it worked great. At the same time, you know, a month ago or so, you had the Canadian federal government start a green bond program and explicitly exclude nuclear. So, you know, one isn't determinative, the other isn't fatal. But I think what you can see is there's an opportunity for leadership for countries like the United States to make explicit statements to say, we believe that, and get other like-minded countries. And then those countries can basically, you know, certify, for lack of better phrasing, that, you know, something is green and worthy. I think, you know, investor groups can also say it too. I mean, you can basically take a position as an investor group and say, we've determined that. And so it qualifies, and we believe we're investing in an ESG product. Now, if you're looking for some special treatment at another level, then who's ever, you know, giving you that certification obviously has an opinion in all of this. But I think that, you know, you've hit on the fuel issue. I mean, not to sidetrack on fuel per se, but, you know, the nuclear industry funds fuel, it funds decommissioning, it's highly regulated. Just because we haven't figured out how to dig a big hole in the ground doesn't mean that it's not being treated responsibly. And I think the issue, while it is a serious issue, it's completely overstated by the anti-nuclear crowd. Whereas you see nothing with regard to the disposition of solar panels or the disposition of wind turbines, where you just want to say, look, yes, the environment's usually important, we should care about it, but then apply the same standards to everybody. So if we have to do things, which we as an industry already do, then shouldn't those same rules be applied to everyone? And I think there's a bit of is it hypocrisy? Is it just lack of equity in doing it? But I think that has to be part of this in the analysis, that you have to apply the same standards to everything. And I don't think that's happening now. And, you know, I think we are in a bit of a moment of change because of what unfortunately has happened in the world. And you're seeing people take a new look at nuclear. And I think it's important to make sure that people have the proper information, because coming back to the theme of investment, I think one of the issues, and this is on the lender side as it is on the investor side, there's a lack of expertise. Yep. And, you know, if you're an institution that's looking to invest money somewhere, even if you're not anti-nuclear, you recognize that it's complicated. And so the question is, if it's complicated, do I want to invest the time to try and figure this out? Do I want to bring people in? Do I want to hire, you know, a ton of outside advisors? You know, how do I learn about it? And I think that's where there's an opportunity for leadership as well for certain groups, you know, not to tout Segra, but, you know, groups that have assembled expertise can do it not only for themselves, but when you think about co-investment models, to say, well, look, I don't know this, but I know US Exim has the expertise, or I know that on the debt side, or Segra has the expertise. And if they can do the diligence, you know, maybe I just team with them because I have confidence in what they do. And I, as the next institution, don't have to do that. So I think that's a way to bring more people into the sector for those that have that appreciation. Hey, it's complicated, buyer beware, but maybe I can find someone to help me through that process.
Yeah, you know, I mean, look, all of that resonates, and I would love personally to comment on all of them, because I think you said some great things. You know, maybe the point most important to me is this level playing field question. And I couldn't agree more that whatever standard we choose to adopt for ESG or whatever other label we want to place on things, it just has to be even. So if nuclear is subject to a full life cycle, kind of do no harm, for lack of a better way of putting it, we should be applying the same to wind turbines or solar panels. And this is a very sophisticated audience, so I won't generalize, but I can't tell you how many meetings we have where solar does come up, right, as a competing technology, and we talk about full life cycle. And to be honest, very few solar investors understand that those panels, after 15, maybe 20 years, end up in landfills. And if we're talking about groundwater, and environmental consequences post, decommissioning of whatever it is, either a solar farm or a nuclear power plant, we should be looking at all of that impact altogether. Now, I'm going to pivot here because we have a lot of Q&A coming in. So the next question is asking about bulge bracket investment banks, talking about nuclear industry analysis. And I'll probably answer this one as both a private and public markets investor. Wall Street has very, very little coverage of the nuclear sphere. If there's any coverage, it would either be on the utility side, And now, I mean, we should mention in the context of who is pushing ESG, Constellation is a great example. And we're going to have a real-time view of what the markets think about a nuclear generation pure play. But that would be covered by a utility analyst. And in truth, they're a little less about nuclear industry fundamentals and a little bit more about analyzing the utility. Maybe on the other extreme, the fuel cycle, there are obviously uranium mining companies and some fuel cycle companies, enrichment, advanced fuels, et cetera, a small opportunity set of publicly listed companies there. And there are no real bulge brackets covering the majority of those. Everyone's probably familiar with Cameco, which would be the largest fuel cycle company in the West, mostly mining, but also conversion. They had some bulge bracket coverage, but other than that, it's pretty few and far between. Now, as an investor, I happen to like that. If we get the technology's impact on our energy transition right, and we get the industry momentum, to Paul's point and to Mehul's point, that we're going to be bringing it in as one of the verticals under the energy transition, coverage will take care of itself. At least as from my seat, I like to kind of be ahead of that curve. And this would not, to be honest, there are a lot of things that the nuclear industry stands out, sometimes in a negative way, as in terms of interfacing with investors. But this would not be the only, let's broadly call it clean tech investment that has very little coverage on the energy banking side that goes to having it. I mean, if you looked at 5 years ago, 10 years ago, solar and wind obviously emerged. It went into batteries. It went into hydrogen. Frankly, last year, nuclear fusion, which is a much longer lead time kind of development opportunity set, still had a tremendous amount of investor interest and was picked up selectively by investment banks. And I guess my point in all of that is just to say that it happens quickly. Focus on the fundamentals and whether or not, as a whole, we believe that fission, advanced fission, and then the companies that are servicing and supporting and improving that business are going to be a bigger piece of the pie going forward or smaller. And if they're bigger, Wall Street will come around. Mm-hmm. Well, so I guess I think I'm going to make sure that I'm not missing anything in the Q&A here. I apologize for reaching up to my screen. But so we have a question kind of more on the VC side. And it's from a seasoned VC investor who's asking a little bit about, lead times. Mehul, I'll turn it over to you just to answer very quickly, because your financings that you will likely have over the next year or so would count as venture. And I'm curious to know what you see your commercialization timeline like. And then maybe I'll also weigh in as an investor who has done something in the venture space, a little bit of what the timelines look like, at least what's being promised, and then what we think can be realistically achieved.
Absolutely. With our Anil Fuel, we are actually in collaboration with Department of Energy's Idaho National Lab. Our fuel actually, as fuel pellets have already been made with the support of DOE. They are about to go into irradiation rig at Idaho National Lab for qualification, which will take about a year. Parallelly, we have a customer inside that's in Canada who is refurbishing 5 of their reactors. And they are looking at economic benefit and the safety benefit our fuel delivers. So we are looking at a commercialization by end of 24. And we are working parallelly very hard. And it's a long days every day, but I think we see this as a near-term answer and deploy this fuel with the HALU out of United States and a Thorium.
That's great. And not to dig in necessarily to the financials, I don't want to bore anybody here, but Mehul, as a quick follow-up, if we think about the way that your business model works, if we're talking about a 2024 commercialization timeframe, how do you recognize revenues? If we are an investor, at what time are you recognizing revenues? How do you think about your backlog? And ultimately, I guess, based on those things, how you want investors, whether venture investors or others, to think about valuing the business?
Well, right now we are at round 1 of our raise, which is very small in compared to our competitors out in the marketplace. But more importantly, our business model is based on licensing fees. So we would be enjoying the royalties or a license fee from fuel fabricator, who we would license our fuel design to. Reactors suppliers who would be deploying this fuel to the host countries would pay us the royalty on the value of the reactor cost. But the more importantly, the economic moat lies in the every unit of power produced using our fuel in those reactors. We would earn, let's say, a fraction of 1 cent for every unit of power produced. And right there is an economic moat. So if VC or an investor were to look at our financial model, they would see the pathway and a roadmap to what can really change the nuclear industry in a short term.
That's a great answer, Mehul. Paul, did you have anything, maybe not specifically, but what you're maybe seeing through consulting and also your industry engagement, maybe more of what you think investors need to see or are expecting to see in terms of accelerating timelines versus historical, maybe to help bring interest?
Yeah, I think that, one of the challenges, I think, for an investor coming into the sector, if you're looking at new technologies, Third Way has that graphic that they do that show, like 70 dots of developers of SMRs, advanced reactors, microreactors, and fusion in North America. And there's no way they're all going to make it, and if 5 to 10 of them made it, that would be a tremendous success. And so it comes down to, well, who's real and who's not. And I think sort of being able to assess that credibility is really important. And, you get into, who's your team, what's your technology, what's your regulatory strategy, what is your target market? Because even if we say SMRs are 300 megawatts electric or less, depending on where you come into that range and the type of technology, some are better at doing things than others. Some have high heat that can be used for hydrogen and desalination, others don't. And so I think starting to see how that vendor conceives of it's time to market, but then what is the market is very important. What is the regulatory strategy? Who are its alliance partners in terms of, do they have an EPC contractor? Do they have an operator? Do they have a fuel supplier? And obviously the HALEU issue is a big one right now. So do you need HALEU or don't you need HALEU? And that's not fatal, but it's something that has to be looked at. And so I think you go through all these things and then you look and say, well, what's the thing that's going to put you in that separate pile? And, I think and I'm not touting any of these companies, but obviously NuScale and INL, you have TerraPower and X Energy with the ARDP projects. You have Rolls-Royce in the UK getting huge government support. You have GE Hitachi at Darlington in Canada. You have ARC with NB Power. Just ARC and GE Hitachi, not only do they have a site, but they have an operator as a partner. So right. You look at these things and say, how is that putting me, I think, in a different category? And then I think it does go back to the market because there's so much sloppy analysis there where people say, well, here's the need for energy over the next 40 years. And this is what we think nuclear could be. And if we just get this percent, well, look at how much money we're going to make. And that's meaningless. You got to look at, well, where are you actually going to sell them? Is it, if you're saying the developing world needs nuclear, well, the answer is, of course it does. But are they ready to take it? Do they have the regulatory, what are all the nuclear infrastructure elements, like as the IAEA might think of them? Are they there so that when you hit the market and you say country X told me they're interested, are they going to be there? And I think the level of sophistication of the analysis of the business plan, as opposed to the technology development plan, when you're talking about reactor vendors, I think becomes critical to sort of see, do they really understand? As a lawyer, lawyers run amok. If you give them a 100-page document, they'll keep drafting and drafting and will never stop. Engineers, I think, suffer from the same disease, and so I think that great, you have all these good ideas. When is this coming to market? When can I deliver it? To whom and where? That's, I think, the key, for a lot of these investors, especially those that have shorter timelines. Some might be more, dare I say, philanthropic and want to promote an idea, which is fantastic. But for those that are looking at it more for the investment proposition, as we would classically think of it, the business model becomes critical.
If I may step in, Adam, I owe this to the audience, especially the investors to your question, you asked me, what is the timeline to revenue? So just so that you know, at this point, we are looking at the refurbished reactors in Canada and Romania. And we are talking total of 11 reactors who would be looking at our fuel to be deployed. And Canada has got 5 of them planned in next 7 years or 8 years to be refurbished. And that changes the play. That up till now, what has happened is that ventures who are investing have been scared of nuclear due to timeline and revenue, or timeline to revenue. And they are realizing the importance and overlooking that, for example, fusion will recognize fuel, in our case, will recognize fuel royalty revenue in year of fabrication, let's say 2024, 25 onwards, once we commercialize right off the bat. Not to mention even a contract before that, when can start a revenue for our fuel. So that is a game changer which we are bringing to the table, where our model is concrete, existing reactors, licensing fee on the fuel and the unit of power, and new reactors. And there's a whole market which is waiting. That's emerging country. That's where the real need for clean baseload answer is. And that's the market we want to go after with our fuel and the US technologies.
Those are great answers. And what I would say as an investor, to this question is again, you're going to have to forgive all of our own biases here. But one of the things that's great about nuclear, to Paul's point and to Mehul's point, is that there isn't a lot of sophistication. You don't have valuations and interest from pools of capital who have typically driven early stage companies to very high valuations, even in the clean tech sphere, present. Which means that if you do know the industry, and albeit the moat is probably a little bigger than for others, but if you are an expert, hopefully separating the wheat from the chaff, so to speak, it might actually end up being easier than in others. Because I think Paul's right. Certainly under any timeline that a typical VC would like to see a business model in action, there aren't going to be 80 advanced reactor developers hitting those timelines, even though they're telling you that they will. Mehul is probably a little bit different, in his model versus generation, but even advanced fuels, there's some pretty aggressive promises out there, and not everybody is going to make it. So it comes back to to investment expertise, right? And we need more of it in the sector. From my perspective, what's going to help is the first wave of, let's just broadly call them new nuclear companies, successfully getting to a commercial stage. Because right now the skepticism is very, very high. I'm a contrarian by nature. When everybody's on one side of the boat, I like to be on the other. And I think if you ask 100 out of 100 generalist investors what the prospects for advanced nuclear look like over the next 5 years, 99 would say it looks really bad. So I like those odds. And I'm also an optimist. So, and I also like nuclear. So it really does come down to rolling up your sleeves, though. Not all vendor designs are created equal. Not all of them have the same regulatory framework. Not all of them have commercial viability. And and Paul's 100% right that the average investor probably underestimates how much new tech has to fit within existing frameworks. And that actually speaks very much to Mehul's business model. So I've done a little bit of rambling there, but it's to say, in my opinion, all things coming in terms of nuclear innovation are frankly the Wild West from an investor perspective. If you want to be a successful investor, you need to go to the shelf and see which research and development assets or companies are not science projects, but are being viewed that way. Are de-risked to a certain extent, have the right commercial partners, have the right government partners, so that they can be one of the few proof of concepts that usher in a bigger wave, of capital. And I'll leave you with this very one promotional statistic that you guys will all have to forgive me for, because despite all of Paul's very, I think, correct and sobering comments about how we're going to succeed or not. My business partner last week was at a nuclear industry conference, and Jigar Shah was speaking. And not that we put blind faith in government estimates, but he did say that the government expects that by 2030, advanced nuclear is going to have about $100 billion of capital flowing into it. And by 2050, that number is going to be $1 trillion.
That's right.
Exactly. Take those numbers for what they're worth. Honestly, maybe they don't even matter specifically. But those numbers relative to what you would have been hearing 2 years ago are quite staggering. And I would say that investors haven't yet caught up to that step function change in expectations.
Yeah, and the thing with that too, Adam, that I think people need to think about is we tend to think of investing in the nuclear specific stuff, like the reactor. But if you want to deploy lots of reactors, you need a supply chain, you need EPC contract, you need all these other elements. Just, once that first project works, the question then becomes, well, where's the factory that's going to produce lots of these if we say factory construction, standardization, all these things that sound great, capital needs to flow into those supporting areas in order for any of this to happen, because most of the vendors just want to be vendors. Somebody's still got to build it and fabricate it. And, just like Mehul's hitting a segment of that, you can run that analysis outside of the reactor to all the other things that support it, because with the numbers that you're quoting, there's lots of money flowing to all aspects of the project. And some of them are less nuclear sensitive to others. I mean, there was a question about the applications. Well, when you think of like hydrogen production, well, there's the whole hydrogen side of it that isn't nuclear. I mean, there's desalination, there's all these other things where money can flow to start thinking about integrated projects. And, just like when we talk about maritime applications, well, somebody's got to build a vessel. And then the reactor goes in the vessel, but so you need shipyards, you need all these things that support this massive build out that's needed, not just for the industry to make money, but I think from my perspective, to solve some of the world's problems that just need to be solved. But there's so many other things where the money can flow outside of the pure nuclear reactor play. There's so many other elements that create opportunities.
That's such a great point, Paul. I'm sorry, Mehul, and I'll let you jump in too. And maybe we need to, that we need to step back, because 3, 4, 5 years ago, consensus expectations was that the Western world was going to shrink its nuclear capacity by 20, then 30, then 50% as we went out. And so to Paul's a point, energy and construction firms, or if you did reactor core design or fuel safety, if you were a startup going into a market that wasn't just slowly, but rather rapidly in decline, you talk about an uphill financial model to sell to people. Not to generalize it, but you switch some of those assumptions, the highest level assumptions about how big the pie is going to get, and you have a very large opportunity set, to Paul's point, that's just outside of new generation, new reactor designs. And I'm sorry, Mehul, I jumped in ahead of you.
No, I was just to Paul's point. I was having breakfast with a institutional investor who is a friend, who is a CEO of a large bank. And I was telling him that nuclear energy, just like any other clean technologies, requires a patient capital. And you guys need to recognize the value of today's innovations, which is going to turn into huge trees. It's exciting to see venture funds, angels, and family offices look to this sector as a important investment, is a very critical thing. And it's a societal change that we all are with incredible returns. And I think we are on the verge of a huge breakthrough on this, because there is only one answer for clean baseload energy, that's nuclear. And once people start recognizing that, they will see the difference between what we had and what we have now in front of us. That's what my point was.
Well, great. Let me see if there's any more Q&A coming in. I apologize. I'm having to switch screens to make sure I'm not missing anything here. But let's see. Let's see. Okay, this is actually a great segue here, because we actually haven't touched on geopolitics. And we had a nice participant here asking a little bit, I think it was from the context of South America and some of their nuclear ambitions. And I hate to pivot off of your question, Mr. and Mrs. Participant, but I want to broaden it out a little bit more. Because whether you're talking about emerging economies in South America or Eastern Europe or Asia, we actually happen to have maybe the foremost expert on some of these topics, exporting reactor designs, with us. So we certainly have to let Paul talk. Mehul also can comment on this, given what I'll let you explain are many of the synergies between your home country of India and kind of how and why you're developing your reactor fuel, which serves as a specific kind of reactor design, and maybe how that actually helps exporting as well. But I'll just start by saying that another positive, in my opinion, as an investor, going back to my prior comment, is that 2 or 3 years ago, Western generation was going to shrink rapidly in the West. That was going to be slightly offset in the emerging markets by technology spearheaded by Russia and China primarily. Some of that was large scale, or most of it was actually large scale, but there was also going to be advanced reactors as part of that planning. I don't want to be hyperbolic, but I think the events over the last 3 or 4 months, from my perspective as an industry participant, have completely changed the viability and the idea that Russia and China are going to be the singular nuclear leaders, especially from an export perspective, going forward, and especially if we're talking about the West. So the dynamics have totally changed, which means it's fertile ground for me to pass this off to Paul and Mehul to comment on it specifically.
Absolutely.
Yeah, I mean, I would start by saying, you know, the world had probably already changed a few years ago, where we were starting to worry about, you know, supply chains and China's more aggressive foreign policy, and reassessing global dynamics and thinking we may be getting into a more regionally polar world. And, you know, people might have debated that, but I think after February 24th, there's nothing to debate anymore. And what it opens up as a question, I think, in terms of assessing the market, is you had the largest player in the nuclear space, Rosatom, you know, for lack of better phrasing, maybe getting capped at the knees, because we've already seen the project in Finland canceled. You have projects in progress that will have problems, whether it's, you know, financing was the big tool that Russia and China were using. So if now they can't move that money, or if, you know, we'll see, you know, the ruble went down, it came back up. We all know it's being supported, but if it goes back down again, all those projects just became much less profitable, more expensive, whatever phrasing you want to use for the Russians. And you have to also consider, if you're a client country, if they promise you 20, 30 billion dollars before, with all that they were promising, they were playing, I think, a very cagey bet that all these projects wouldn't happen at the same time. But if they did, they probably didn't have enough money or the supply chain to do it. Now their money has to go to other things. They've got to go to, you know, the Russian economy, to the Russian military. It's just not believable that they can execute the same way, you know, even if they round trip some of the money to their own suppliers, and it's more of an accounting thing and it doesn't leave the country. But the question now becomes, and now what? You know, I think the opportunity is there, but then we have to offer something. I think the larger question is, what does this mean for China? Because, you know, when you stack up Russia and China, yes, Russia was the biggest and the most active, but then when you look at the size of the economies, China would be the more fearsome long-term competitor in the sector. And now you start to say, well, if I'm a country, I maybe need to think of my bilateral relationships a little bit more. I see how things are flipping with Russia. You know, like in the case of Turkey and Akuy, you're building 4 plants, but Turkish drones are taking out Russian armored columns. That's not good for the bilateral relationship. So if you think that Russia went a certain way and never believed that could happen, but now it did, how do you assess China and what they're going to do? And that's a debatable point. Will China invade Taiwan? I don't know. Maybe they do, maybe they don't. But if you're going to pick a long-term partner, multi-decade, are you going to make that bet? And some countries will, but I think a lot of them either won't or will be more cautious. And so that creates opportunities. It creates a massive gap in the market. But I think when we still thought about how to compete with Russia and China, what was compelling about their offering was an integrated package with financing. That still is needed by a lot of these countries. So just because the Russians may have left the field of play or a weaker player on the field of play doesn't mean that what they were offering wasn't compelling and for a lot and frankly needed by a lot of these countries, especially when you consider there was a question here about, inflation. And, when you consider projects are all getting more expensive because of inflation, because of commodities, because of labor issues, so all these things are putting more pressure on where does the money mostly come from? Government budgets. They're under stress. They have to do a lot of things that maybe they didn't have to do before. And now we're asking them to finance nuclear. And so, the ability to provide a more sophisticated solution becomes very important, to include building a project that can mobilize private capital into it, even if not in the front end, but under refinancing, so that if you need that lift by the government during construction, you can get that government money out and replace it with private capital that then sees it as a good long-term investment if you get all the structuring right. So I think the bottom line is, yes, the world has changed. What are we going to do about it is the question.
And Mehul?
Absolutely. Geopolitics is the foundation when it comes to success or failure of any business. And we are in a very unique place, speaking from the aspect of our business, and I'm being from India. India produces reactors today at $2 million per megawatt. Same reactors in the Western world is 5 to 7 times the cost. If nuclear has to be a success in the world for a clean baseload energy, India has to be a player. And I think this current geopolitics is really igniting those burners now at this point, because India and US has a 1-2-3 agreement, which has been sitting on the shelf for 14 years. And at the same time, Canada and India has a bilateral nuclear pact as well. So coming to our fuel again, it ignites all these burners at the same time. And for the emerging countries who can afford cheap reactors, because all those poor countries where the need is, they cannot afford a $2 billion reactor. They need $500 million reactor, which can be deployed in 4 years' time from groundbreaking to criticality. And I think geopolitics is the foundation to the success of nuclear to come around. And I think in times that's coming ahead of us, we'll show that as an answer.
That's great. Well, we are coming up on our hour here. I've not seen a new question come in unless I'm missing it. So I'm going to check one more time here, but I don't believe so. It looks like maybe we're through. Let's see here. 1 second. 1 moment. Let's see. Okay, let's see. Nope. Okay. I think we covered everything. If somebody is listening here and I either missed it in the 2 areas of Q&A, please repost it. And I'll also accept my apologies for missing anything. I've tried to kind of get everything. But on a final note, from one biased market participant, nuclear has far too long been ignored as one critical piece of the energy transition puzzle. It just so happens that if the technology reaches its potential, it can be an extremely impactful piece. Again, kind of coming at this from the highest levels, the expectations, I can tell you from an investor perspective, are very, very, very low. So the hurdle to a certain extent, I think is very, very low. And that's a bit of a rare combination, given how much focus the energy transition, net zero, carbon reduction, clean tech broadly has received over the last 5 years in particular. Said differently, nuclear really stands out as a bit of a unique ignored opportunity. I will agree with some of the more lukewarm points that there's maybe still a lot to prove, but at least as somebody who has analyzed business models for their career, I think the opportunity set personally is looking better and more promising, certainly than any other time since I've been looking at the nuclear space, and honestly, even quite competitive versus some of the other things that are being shilled by competitors, clean tech ventures. So my hope is simply that everything continues moving in the right direction, but that to Paul or Mehul's point, I can't remember, but that the government stakeholders, commercial stakeholders, investors, and regulators all come together to help realize that opportunity over the next 5, 10 years, and then into the decades that we'll be working on this issue as a global society. So thank you everybody for joining, and I hope this was entertaining.
Thank you so much.
Thanks a lot.